One of the fastest growing sectors in crypto right now is RWAs. RWA stands for real world assets. And basically, what this sector is doing is bringing real world assets on chain. This could be the form of tokenizing real estate, treasuries, bonds, stocks, gold, you name it. That is what the RWA sector is looking to do. And if you take a look at RWA XY or .xyz, you can see here kind of the status of all the different things that are being tokenized. For the most part, the current RWAs that are being created are US Treasuries or T-bills, commodities, and stocks. So you can see here, there's a list of a couple of different things that are being tokenized in terms of their market cap, asset class, and their 7 or 30-day volume change. And BlackRock is doing a huge chunk of this right now. And this is just in the form of treasuries. So basically, they are bringing T-bills on chain. Now, you also have a couple of others that are specializing in real estate, like Parcel over on Solana. And then you have some that are just simply focusing on commodities like gold and silver, as you can see here with Tether Gold and Paxos Gold. Also check out DeFi Llama to see some of the protocols that are specializing in the RWA sector. Like you can see here, this is also another one that's focused in real estate. However, there is one sector in particular in the RWA category that is ripe for disruption, and they have a team that's actually been around the bush and is not just, hey, look, we're just going to launch today. And this has to do with the carbon market. Some of you may have already heard of this one, but it's Klima DAO. Klima DAO came out around 2021, and this was around the time of Olympus DAO. And the problem these guys are trying to solve is carbon credit liquidity. So every year, society is pushing more and more for companies to do their share and reduce their carbon footprint. And some of you may be thinking like, nah, this isn't much of a problem at all for companies. I mean, the only companies that may need this are like oil companies, coal companies. Well, actually, believe it or not, there are tons of companies that are quote unquote a dirty business. Exxon, Shell, BP, Chevron, of course, these are energy companies. But you have things like Amazon. These guys are in logistics. They're delivering stuff, so they're consuming a lot of these resources. Or you have things like Samsung and technology companies that are creating different devices that we like to use and consume. Yeah, that is a dirty business. A lot of the things you know and love, especially on the screen that you're looking on right now, or phone, computer, whatever, it was produced by a dirty business. And a lot of these companies are trying to reduce their carbon footprint. And currently, there are a few ways to reduce your carbon footprint. First is you simply just don't produce the good or resource that you're selling. And unfortunately, businesses aren't going to want to do that. They're in the business to make money. The second approach is simply just build a bunch of solar or wind power plants, plant some trees, or simply just capture some good old CO2. And I don't know about you, but if I'm in the business of making tires or selling cell phones or building cell phones, I don't have time to go out there and plant a bunch of trees or fill my backyard with a bunch of windmills and solar panels. Like, that's why they have a thing called carbon credits. And this is what Klima DAO is coming into place to do. Carbon credits represent a reduction or a removal of 1 ton of CO2 emissions. These are typically bought and sold on an open market. And there's a problem with this open market that they have. Well, they actually have a couple. These markets are pretty terrible. Some places will have carbon credits for like $7 and others will have them for like $50 or $60 a credit. But it gets even more complicated. Not all these credits are created equal. So basically it's a goose hunt, and it's really inefficient. And this is basically where Klima DAO comes into play. You can basically think of these guys as the Amazon for carbon credits. So you could just go to Klima DAO and realize that, hey, look, as a business, I want to reduce my carbon footprint. What is the most economically and most efficient way to do this? Well, it's through Klima DAO, and you know you're going to be getting the best price and the best deals. Klima is a RWA protocol with an autonomous asset manager that has 1% of the carbon market TVL. Coming in April, they're going to be having Klima DAO 2.0. This is basically the introduction of the decentralized carbon market. Klima 1.0 was mainly focused on capturing the carbon market share, and Klima 2.0 has been introduced to create a more simple and efficient carbon credit market in terms of functionality and pricing. So Klima will be moving to a 2-token model. The 2 tokens are Klima and Klima X. Klima X will be your governance token that will determine the risk portfolio, and it also, of course, governs the protocol. As for Klima, this is your fully asset-backed tokenized carbon credit. These are backed by real carbon credits. And Klima X is the economic governance token. And the value of Klima X is inherently tied to the value of Klima. This is mainly because Klima X will trade against Klima in the Klima X LP. So Klima X is your governance token, and effectively this represents the upside of the protocol because it has a fixed supply and it earns yield. So Climax has a set supply, whereas Klima has a flexible supply based on the amount of carbon that is brought into the protocol and that's redeemed from the protocol. So here's the details on the tokens. The Klima token is going to start with a 20 million token supply, and the supply will expand and contract again based on redemptions as well as issuance. So as people are putting carbon into the protocol and then redeeming that. This is the general idea of what it looks like. You can see here, you can go on to the DApp and then you can see, you can go based on the region and what you're looking to get a carbon credit for, the type, the year, and then you can give USDC in exchange for these carbon credits. And then if you're trying to deposit carbon, this would be basically saying, hey, look, here's some carbon so I can get some Klima tokens in exchange. This is basically what the AMM looks like. Again, going back to the tokenomics, this is created at a 1-to-1 basis, currently based on the carbon that they have. And for the Klima X token, there is a fixed supply of 100 million. 40% is given as an incentive yield over time. Another 40% to the Klima holders. And basically, again, this is the governance token. So this will set the price curve for the carbon classes, and it sets the retirement spread. So basically, it adjusts the fees to mint and burn the different carbon credits that are given and taken away from the protocol. Here's a visual to understand what's going on the back end. You have the carbon sellers selling to the AAM, the automated asset manager, and then issuing tokens in return for the credits that they receive. And then you simply have the carbon buyers, which are going to be like your Amazon or like your ExxonMobil, etc., looking to buy more carbon credits to offset their carbon footprint. They're going to be buying the tokens from the market, giving the tokens to the protocol, and getting these carbon certificates in exchange. And then you have the carbon credit registry. This is basically the checks and balance of what's in the protocol and what's going on. So there are 3 parts to the Klima protocol in this whole machine. The first part is the automated asset manager. This takes care of issuing tokens for the credit received and then issuing certificates for the tokens received. So an example of this would be Shell coming to the protocol for retirement certificates. So rather than going to the off-chain market, the thesis of Klima is that when we aggregate carbon in an index like the Klima token, we can redistribute all protocol revenues to users, and we can unlock economies of scale and realize better prices in size. The second part is the bond market. This is where the Klima token holders can stake their tokens until a set expiration date and earn bond yields. So you can kind of think of these like T-bills, where you park your cash with the government and they pay you a fixed rate. As in this case with Klima, bond market yields are paid in the Klima token, which represent the risk risk-free rate of carbon returns. The third part is the liquidity market. This is what you know and love as like Uniswap or like Radium on Solana. This is basically providing liquidity for people to exchange their different tokens. So you're earning a yield because you're taking the risk of impermanent loss. You're basically taking token A with Klima. So this could be like ETH and Klima and depositing into a liquidity pool, and you're earning incentives for that as well as the swap fees. You can also see here that these guys have a chunk of voting power with Aerodrome. So these are the additional incentives that they would be giving out. These guys are the 7th largest protocol holder of VE Aero. They have a 3.5 million token supply, and this acts as the extra liquidity incentives. These guys are over on Base. I'll give more details on that later, but they also have a pool on Aerodrome. And these guys have a lot of Aerodrome governance power, so they can direct incentives their way, in addition to the ones that they're going to be issuing. But those are the 3 different markets for the Klima machine. Once Klima 2.0 goes live, this will make a little more sense now that you'll have a tool or a app to play around with. But to recap what was just stated, the AAM, this is where the carbon is issued and redeemed and the tokens that you receive. So in this case, as a company, I get these Klima tokens in exchange for my carbon credits. I can go ahead and stake these tokens to a underlying portfolio and earn a yield from that. On the other side, the Klima X, these can be staked to determine the fees for issuing and redeeming these different carbon credits. So again, that is the governance token. So Klima, the carbon credits. Klima X, this is your governance token that determines the future and where the protocol goes in terms of fees and portfolio allocation. The second part is the bond market. This is where you stake your tokens, and you can determine how long you want to stake them for, and based on the time frame, you get a varied yield. The next option, again, is the liquidity market. This is just like Uniswap or like Curve or any of the liquidity protocols you know and love in DeFi. You take one token or token A with token B, pair them together, and provide liquidity. You will earn the exchange fees or the trading fees on that token pair, as well as additional incentives for providing liquidity because you're taking on the risk of impermanent loss. I'm not going to go into details on impermanent loss in this video, but understand when you're dealing with volatile pairs, impermanent loss will be much greater. But again, for the risk you're taking on, you're getting additional incentives in addition to the swap fees. So starting in April, you will be able to participate in this fair launch by staking the legacy Klima tokens. You can actually get these Klima tokens off of Aerodrome or a DEX. This is on Base. These guys are on Base now. They initially started on Polygon, but they did migrate over to the Base chain. And one of the easiest DEXs to get this on is on Aerodrome. Aerodrome is kind of like your Uniswap of Base, but most of the liquidity is there. Here's an important point that I want to highlight. Currently, Klima is the asset token, and the current market cap is around 5 mil at time of recording. There are 20 million tons, also known as 2 million of carbon credit futures, as well as 3.5 million of the VE Aero tokens on its balance sheet. All of these assets are theoretically backing the Klima token. The assets alone are valued at more than the current market cap it's trading at. Now, for the tokens that you're going to be staking, you have a couple of things to keep in mind for this points program. So the TLDR on this, before I get into it, is the earlier you stake, the more points that you earn. So staking the Klima token, you're actually going to be earning 2 tokens. So not just one, but 2 tokens. And TLDR is the earlier you stake, the better you do. So when you stake on day 1, the week 1 participants, they will gain a 2x multiplier. Week 2 participants get a 1.5x, and anyone staking after that will get less. There is a bit of a gamification because if you're staking and you're like, oh, I'll just unstake after the points get slower, well, there actually are penalties on exit. So hang on. If you're staking early, you will actually have a exponential growth in your points because these do compound. So if you're staking on day one, just expect this to be buku amounts of points. Now, there is a burn mechanism, like I just mentioned. If you are jumping into Klima and you're just like, hey, look, I'm just going to withdraw after like a week, 2 weeks after I farm these points. Hold up. There's a burn mechanism. So if you withdraw before the staking period ends, a percentage of those points, not the Klima that you have, but the points is burned. This exit fee increases relative to the value for holders. And then there is also a time-based burn. So you have a base burn, which is 25%. And then as time goes on further, you have the linear burn. So as time goes on, this exit fee does increase relative to the other holders in this pool. So think of it like the last man standing. So the last person to stay staked is going to earn the most points. So here's an example of what this would look like. Alice, she starts with 10,000 Klima tokens, and she begins to start on day one. Because she's starting on day one, she's getting this 2x bonus. By the time you guys are seeing this video, you will have missed out on the 2x bonus, but you still can participate in the 1.5x. So for week one stakers, as a week one staker, she's going to get this 2x bonus over her 10,000 Klima tokens. So if you multiply this out, 10,000 times e to the 0.00274 times 1 times 2 is going to give you 20,055 points by the end of day one. So basically what you need to understand is she's getting 2x, so 10,000 times 2 is 20,000, and the additional 55 points is just coming from the accumulated quote-unquote yield for the points that she is receiving from her stake. That's why it shows she gets 20,055 points at the end of day one. Now at the end of the 90th day, this does decay because the 2x points bonus, that decays over time. So she's not getting 20,000 points every single day. Once it goes to 1.5x, she's going to be getting like 15,000 and I don't know, some odd number like 20. And that's just the 1.5x bonus plus the additional points that she is just earning. Because there's a standard baseline rate that you're earning from points without the multiplier. The multiplier is just juice. Think of it like double sauce, whatever you want to call it. So again, by the end of the 90th day, she's going to have earned a total of 25,593 points. Whereas normally, if without the multipliers, it would be nowhere near that. And I'll show you later in the calculations. But the multiplier is massive. This 2x multiplier, this allows the yields to start compounding early on. So again, I go back to this. The earlier you stake, the more points you get. That's basically the TLDR. The second example is Bob. He starts with 5,000 Klima tokens. Now, he begins starting his staking on day 8 at the beginning of week 2. So he's only getting the 1.5x bonus. This is still better than no bonus whatsoever. By the end of the first day, he's received 7,521 points. And by the 30th day, this increased to 8,143 points. Bob then decides he wants to withdraw his entire stake and sell it. Remember, there's burns and penalties involved when you do this. This is normal for protocols to incentivize other people to hold and, commit, not just, I'm going to jump in here and then the next I'm just going to cut it. This burn mechanism is to incentivize long-term holders. So Bob loses all of his points, which are allocated to the remaining stakers. So out of his initial 5,000 Klima, 25% plus the 75% times 30 divided by 365. Remember, that is the burn calculation that we went over. So if you need the burn formula, you basically have the 25% base burn, and then you have the linear fee. So if you go back to this, 31% of his Klima is burned. So he basically walks away with 3,442 Klima. He still does have his points, so has his point score. This is updated in real time, and you can see that on the dashboard. So if you aren't really good with math and good with numbers, don't worry. You got a dashboard, and it literally says it right here in this article. In short, the simplest way to maximize points in your allocation of Klima and Klima X is to stake now and leave your tokens staked right to the end. So after 90 days, which the staking period starts in April, this is when the distribution of the Klima and the Klimax tokens will occur. So at the end of the staking period, this will show up on the UI, so it will make a little more sense. The Klima tokens that you have in that contract, those will be permanently frozen. So you can't withdraw and take those out and go and sell. No, they're basically just stuck and roasted. Not really roasted. But in exchange for that, you're getting your Klima and your Klima X tokens. So again, the longer you're staying in there, the larger and the earlier you get in, the larger share of the tokens that you will get. The points calculations will be finalized after the end of the term because, again, when people exit early, those taxes are going to go to the other people that are still in the pool. Of the people that are still in the pool, these will be allocated a proportional share of the 17.5 million Klima tokens and of the 40 million Klima X tokens. So that equates to 40% of the Klima X supply and 87.5 million of the Klima supply. So if there's a total of 2.5 billion points and distributed all amongst the Klima stakers, if a participant has 25 or 2.5 million, they basically have 0.1% of the total. So they would get 0.1% of the total allocated Klima, which would result in them getting 17,500 Klima and 40,000 Klima X tokens. It's literally just math. That's all it is. I'll show you guys a spreadsheet shortly to kind of break it down to see in terms of points. But think of it like the more points you have, the more tokens you're essentially going to get. The more points you have relative to everyone else. So after this happens, they give out the distribution claims. This is when the token contracts will be finalized. So the final token allocations will be announced. And then, of course, the community, if you're like, oh, snap, I got missed, you'll probably have time in Discord to be like, yo, hey, I think I got missed by accident. Hey, mistakes happen, but that's not saying a mistake will happen. Week 3 is when the deployment and claims will occur. So the new token contracts will be deployed on Base Network. These guys have migrated to Base. These guys have a ton of voting power from Aerodrome. So they're likely going to use that to direct incentives their way. A good old flywheel. Week 4 is going to be the completion and transition. This is when all the token distributions will completed and the transition to Klima 2.0 and supporting the new tokens. It's an example of what this would look like with the multipliers. The 2x multiplier is, obviously this is with 10,000 Klima tokens staked. And if you did day 1, you're going to get the 2x multiplier. But again, it's past that point, so you're going to be focusing on the 1.5x. But you can see the difference between these points that you're getting. So obviously, day 1 is going to be the best. Now, at the 1.5x, you can see here that you are getting the 15,000 points and then moving your way down. So as you can see, day 1, you get 41 additional, 82, 123, 165, and you can see it's starting to compound. And by the time you get to day 87, you can see here you're at 19,037 points. Whereas if you went to something like the 1x multiplier, which is right here, you can see here at the end, you're only at 12,796. Now, let's take out the multipliers. You can see here that the base is 2,796 points, whereas this base is actually 4,037. Remember, the base is basically 15,000 right here. So let's just get rid of the base and just show you the power of compounding. The power of compounding is this. You end with 4,037 points, or you end with 2,796 with a 1x multiplier, or if you had the 2x, you ended with 5,383. That is the power of compounding. Now at launch, there will also be a liquidity pool option. So you can earn from trading fees as well as incentives. You can see here, obviously, token A with the governance token, provide liquidity, and based on the time that you provide liquidity for, you will be earning more of the yield. So if you decide to lock your stake in for like, I don't know, day, 10 days, whatever, you're going to be earning more if you decide to lock it for a longer period. So again, these are just simply from liquidity fees. This is the trading fees between going from token A to token B, and then also the incentives that are given out. For Klima, 87.5% is given to the current Klima token holders. So you get this by staking into the 2.0 contract. And then if you stake early, you're going to earn more of those points and a larger share. 10% goes to the DAO/treasury. And then finally, the other 2.5% to strategic partners. As for the Klima X token, 40% given to the Klima holders, 5% to ecosystem grants, 40% to programmatic incentives. Think of these like your liquidity pool fees, etc. P Klima holders will get another 3%, 4.5% to the DAO/treasury, 2.5% to strategic partners, and then another 5% to the product design and development. You can see the vesting schedules here. The website will be in the description below as well, so you guys can check out all the details on it. You guys can join the Discord as well to get more information and ask any questions that weren't answered on this video. But in summary, if you guys want to get your share of the new tokens, make sure you guys check out the staking contract on Klima DAO. What you need to look for Klima DAO is these guys are trying to be the leader in the carbon credit market. These guys have a best-in-class AAM for issuing and redeeming carbon credits with zero central party. And also with 2.0, we're on the road to decentralization. And also not to mention that Klima is now on Base. This is one of the fastest growing chains. And these guys are basically buddy-buddy with Coinbase. Of course, Base is Coinbase's go-to chain. This is their off-ramp from their exchange that they push people towards. In addition to this tokenomics revamp, there is also KUSD on the road. This is coming later in this quarter, but think of it not just like your stable coin, but it's a decentralized saving token that is backed by T-bills. So instead of something like USDT or USDC, it's basically just a stable coin with a yield. Of course, this protocol is not without risk, but in my opinion, I like to bet on teams. This team has been around since 2021. These guys are still kicking, they're pushing, and they're actually competing in a market that's not oversaturated. Whereas the T-bills, like, who's going to beat BlackRock? Good luck with that. Whereas these guys are focusing on the carbon credit market, and they already own 1% of the market share. I like to bet on teams, and with the rapid growth of the RWA sector, Klima offers a favorable risk to reward scenario with the RWA category. However, again, this is not without risk. This is not financial advice. I'm not a financial advisor. DeFi is risky. Crypto is risky. RWAs are especially risky. Welcome to crypto. But if you guys want to get more details on this launch, I'll leave the links in the description below so you guys can check that out. Let's go ahead and hit you guys with Proverbs chapter 23, verses 5. Cast but a glance at riches, and they are gone, for they will surely sprout wings and fly off in the sky like an eagle. That's so true, man. Easy come, easy go. Be good, be righteous. Peace out, guys. Keep your eyes on the prize.